What if I told you there are 4 stocks right now where Wall Street's own price targets imply double-digit, and in one case, triple-digit percentage upside? Of course, there are a lot of them, but not a lot outside of AI and other popular sectors hype. One of them is sitting on oil that's literally flowing again after a decade. One is a biotech with a stacked catalyst calendar this year. One just turned its biggest drug into a growth engine. And one is the company that basically owns live music on planet Earth. I'm going to give you the bull case for all 4 and the risk that could blow each one up. Let's go. Quick, but important. I'm not a financial advisor. This is not financial advice, and nothing here is a recommendation to buy or sell anything. These are volatile stocks. Every single one can drop just as fast as it can rise. Do your own research. Prices change daily, so verify before you act. Cool? Let's get into it. The first stock is the highest octane name on the list. Sable Offshore restarted the Santa Ynez oil field off the California coast, a field that had been shut down since 2015. As of this spring, oil is flowing again at over 50,000 barrels a day, and they've started actual sales. Here's the kicker. The restart is backed by a Federal Defense Production Act order, which is about as strong a tailwind as a small cap energy company can get. And the analyst targets, while the stock trades in the mid-teens, price targets sit in the $22 to $30 range. That's not a 30% move on paper. That's potentially 40 to 80% upside if they execute. Every new platform coming online is its own catalyst. This is a binary stock. The state of California is in an active legal fight to claw back oversight of that pipeline. If the courts side with the state, production could stop cold. It's also trading at a rich premium to book value, so a lot of good news is already priced in. This is a high risk, high reward bet. Size it like one. If you want a biotech with a packed catalyst calendar, this is it. The second stock. Roivant runs a unique model. It spins up subsidiaries it calls vants, each chasing a specific disease area. Right now, the story is the pipeline. They just posted strong data on a drug called IMVT1402 in hard to treat rheumatoid arthritis. The kind of numbers that made TD Cowen and Citi jack their price targets up to the 40s with the stock trading high 20s. They've got a wall of catalysts in the back half of the year. A brepocitinib launch plus multiple data readouts across several conditions. Consensus rating is a strong buy. 11 buys, 0 sells, and they're sitting on roughly 4.5 billion in cash. So they're not getting squeezed. This is biotech. Readouts cut both ways, violently. One failed trial and the bull case craters in a single trading day. The company is deeply unprofitable, burning cash, and revenue actually fell sharply year over year. The average analyst target is going up recently. The third one is the quality name, the grown-up of the group. Biogen spent years in the wilderness as its multiple sclerosis franchise faded. That story is changing. Their Alzheimer's drug, Leqembi, is inflecting hard, sales up about 74% year over year. They just blew past earnings estimates. They're rolling out an easier to use at home injectable version with regulatory wins in the US and a priority review in China. And the pipeline has real readouts coming mid-year. The bulls, Goldman, Bank of America, have targets up at 250 and 260, which from current levels is a serious move. This is the lowest drama way to play upside on this list. It's already trading near its 52-week high, so you're not buying it cheap. to hit those bull targets, basically everything has to go right. Lekembi has to keep accelerating and the pipeline has to deliver. The old MS business is still bleeding market share, and at least one major bank, HSBC, has a flat out sell rating on it. Lower volatility means a fast 30% pop is the least likely here. This is more of a grind higher story. You know this company even if you don't know the ticker. Ever bought a concert ticket? Yeah, that's them. It's the fourth one / Live Nation basically owns live music, concerts, venues, and Ticketmaster all under one roof. First quarter revenue climbed 12% to nearly $4 billion. Demand for live events isn't just holding, it's accelerating globally, and management says international markets are the next leg of growth. Analysts are overwhelmingly bullish. A strong buy consensus with targets up around $200 and operating cash flow north of 2 billion. This is a high quality compounder that keeps printing. This is the least likely of the four to hand you a fast 30%. It's a steady compounder, not a rocket. Consensus upside is more like 10 to 17%, not 30. It trades at a steep valuation, around 50 times earnings. And there's a Department of Justice antitrust case hanging over Ticketmaster that could force real changes to the business. Great company, different risk profile than a moonshot. So there's your 4, Sable Offshore, the highest risk, highest reward bet. Oil's flowing, but the lawsuit could have an impact. Roivant, a biotech with a loaded catalyst calendar and a fortress balance sheet, but readouts might be an issue. Biogen, the quality name, riding Lekembi, but already near its highs. Live Nation, the blue chip compounder of the group, lower upside, but a real business. Here's the one thing I want you to take away. The stocks most likely to give you a fast 30%, Sable and Roivant, are also the ones most likely to drop 30%. You don't get the upside without the risk. Anyone who tells you otherwise is lying to you. If this breakdown was useful, hit subscribe. I will try my best to do these every week. Drop a comment with which one you'd actually buy, and I'll pin the best takes. And seriously, do your own research before you put $1 anywhere. I'll see you in the next one.